We may have snapped the winning streak yesterday, but we look to be right back on today with futures green across the board. That said, we're also seeing gold higher, much higher. We're well above $4,000 an ounce. 30 minutes until the start of trading. I'm Bonnie Quinn. Matt Miller is off. Dani Berger is on assignment. Bloomberg Open Interest starts right now. Coming up, the debate around an AI bubble getting louder. Billionaire Ray Dalio says the rally feels frothy. Goldman dismisses bubble fears. A golden milestone. Gold smashes through $4,000 for the first time as the US shutdown fuels its rally. And Tesla shares rebounding this morning after the company introduced cheaper versions of its Model 3 and Model Y vehicles. Stocks to watch then, keeping an eye on the drivers of the AI rally amid all of this bubble talk. As today's Bloomberg Big Take notes, never before has so much money been spent so rapidly on a technology that, for all its potential, remains largely unproven as an avenue for profit making. Oracle, for instance, reportedly missed revenue estimates for its rental of AI cloud services. Well, that Oracle report could be the first crack in AI's armor. Proof that not all investments in the emerging tech will pay off. Julian Emanuel of Evercore ISI is undeterred, though, by the bubble talk.
The fact that every one of these capital market cycles has ended with an incredibly robust corporate action pipeline, and we're just starting to see that form, tells you that there's further to run. And as difficult as it is, and it is difficult to invest in these valuations, and we think that you need to stay invested.
So many questions to answer, but let's begin with Elon Musk's startup xAI raising $20 billion to finance AI chips, tapping backers including Nvidia. Bloomberg Tech's Ed Ludlow joins us now. So apparently it's about a $2 billion investment on the part of Nvidia. Ed, explain to us how it all works.
Yeah, the structure is complicated. So rather than xAI raising debt or issuing equity directly, xAI with a pool of investors is setting up a special purpose vehicle. The special purpose vehicle is going to raise about $12.5 billion of debt, $7.5 billion in equity. That could change. And then this entity, this financing shell, essentially buys the GPUs, the AI chips that go into the data center, in xAI's case, Colossus 2 in Memphis, Tennessee. And xAI then rents or leases those chips or the capacity over a number of years. So the investors front up the capital through this vehicle. xAI doesn't take the capital burden or take any debt onto its own balance sheet, but the investor pool gets a guaranteed return, right? A guaranteed payment from the lease or rent payments that xAI is making.
And xAI is private, obviously, right? So it can have as many special purpose vehicles as it wants, and we don't really get to have an opinion on that. Nvidia obviously thinks it's a good investment, but Nvidia seems to think that a lot of things are good investments right now. Can Nvidia hold on to its full faith and credit reputation?
So what we reported overnight was that Nvidia was going to put about $2 billion into the equity piece of the SPV. Jensen Huang has just, in the last half an hour, given an interview on another network where they explicitly asked about our reporting. He confirmed that they are investing in xAI. Jensen Huang said that he regrets they can't put more into xAI at this time. And he kind of indicated that this is not a traditional venture capital deal, nor is it straight vendor financing. But that's pretty much as close to a confirmation of our reporting as we're going to get. And straight away, the concerns of the market or the questions of the market are: is this another example of circular financing? Right? Nvidia hands some money over to xAI. xAI uses that money, or albeit indirectly through this mechanism, to buy Nvidia GPUs, and they are Nvidia GPUs that we're talking about. And therefore, it's a kind of circular financing, or at least circular driver of demand.
Ed, does this market understand exactly what's going on? You saw Oracle sell off, for example, on the idea that perhaps margins aren't there. And it's continuing that sell-off just a little bit again today. And I'm wondering, why? Is Oracle not doing a smart thing in many ways?
So the Oracle case study is very interesting. This is based on a report in The Information where they disclosed or reported some of the losses that Oracle has through the mechanism of leasing chips. Oracle leases the chips to customers, capacity. And in that case, in the information report, it was basically Nvidia's leading edge or cutting edge high performance compute systems that those losses tied to. The first part of your question was, do the investors understand? Oracle is also a big part of the debt story. Its most recent issuance in the corporate bond market took its total debt to about $100 billion. And I've spoken to so many investors over the last 2 weeks, so many, and they say it's a very simple equation. If Oracle or the software companies that lease the capacity from Oracle can show clear revenue growth from AI, then everyone is calm about the debt. But if those revenue figures aren't there, that's when we're going to start being worried about the leverage involved in financing these because of the losses being made. And as you know, Vonnie, Oracle has swung to being free cash flow negative this year for the first time since 1992, the year I was born. So there are signals out there that things are worth closer and careful examination.
Yeah, it's interesting. BlackRock says that free cash flow is one of the things that they're really looking at when it comes to these AI valuations. We just had Ray Dalio on this morning, among other people from BlackRock who've said the same thing.
Right.
Ed, thank you so much. We're going to be speaking to you in just a little bit. Bloomberg Tech, Ed Ludlow, is going to be revisiting us when we get to our Blue Origin launch in just a little bit. Meanwhile, Bloomberg's macro strategy team is saying the AI bubble could pop in the next 1 or 2 quarters. Michael Ball is on that team and joins us now. So, Michael, it just seems like this week was the week when everyone started to really talk about this bubble popping. I mean, we've had Ken Griffin, we had Paul Tudor-Jones, we have the Bank of England today, putting out several comments about how, we're at risk of maybe not a crash, but a deep downturn. And you also believe that?
Yeah, I think we were a little stretched. I obviously think there's a long-term structural story here as we find out exactly what AI really means for all of society, and it's going to take decades, so let's be clear. There's a little bit of froth in the market for sure, and valuations are stretched. And when I look at option markets even, I see that people are reaching now for exposure. We're seeing call skew for the top 50 S&P stocks, which is mainly made up of AI plays, now in 95th percentile, which is relatively large. So you're paying up now, and you're taking leverage and you're paying up for that.
We're looking at the Bank of England quote on screen there about, the various different things that are injecting a little fear and concern into this market. Is that why we're seeing gold above 4,000, or is momentum? I mean, there's so many things it could be, right?
Okay, I'm sorry, you're talking gold there? Yeah, I mean, gold itself has now just become very much of a momentum trade. There's a perfect macro story behind it almost, which has allowed this whole year to really unfold in the way it has, right? We have worries about deficits. We now have this debasement concern that France and Japan has brought forth. But overall, we also see on the tactical level, we see ETF buying continuing. We see central bank buying. Poland recently came in, had some large purchases. China's been in there almost every month now. And also, you have this technical picture where it's just a very good-looking chart. Everyone's chasing for exposure and looking then to get out of other plays, like digital play, for example. Bitcoin's recent volatility has kind of made people pause there.
Yeah, and Bitcoin is higher as well today. But I was listening to Lisa Abramowicz's interview with Bob Rubin yesterday, where he said, yeah, it's funny gold goes up because it really, it's about as useful as Bitcoin in some ways, right? We don't actually use it for anything.
Right.
Why is it considered a safe haven?
Gold is considered a safe haven, or Bitcoin?
Gold.
Okay, sorry. So gold itself is just seen as sort of being without this fiat currency drag, where we have institutional risk, where we again have this sort of impromptu of central bank independence, which has resurfaced under the Trump administration. And again, like gold, to your point, is not something I can go to the store and hand over like the dollar, so it's little apples to oranges when we're comparing it to fiat currency. But overall, it has historically proven during periods of turmoil, with geopolitical risks rising or with governments being a little bit less prudent with their fiscal spending, as a store of value. So again, it has a long history of this, and that's why it's having its moment in the sun, because all these macro narratives that would support it are hitting all at once.
It tends to take a deep dive when it dives.
Right.
Are you as worried about gold diving as you are about the stock market and particular areas of the stock market diving?
Yeah, it's a great question. I think I look back in 2022 when we started our rate hiking cycle, and gold had a 35% drawdown. So there are periods where that, again, momentum shifts. But if you look at a 5-year chart since COVID, there's plenty of reason to think we could have a 20% pullback, and you would still be massively up if you held it through that period. So again, frothy market, momentum trade, But there is a fundamental narrative. But again, people, even with AI, are reaching for gold as well.
Michael, are people spending their profits? I mean, where are all these flows coming from? You know, you see a little bit of buyer exhaustion yesterday, particularly in the semis, but it was only down 2%, and we're right back in today. Where is all this new money coming from?
Yeah, yesterday really did seem like a lot of profit taking, and why not, right? You've had great gains in a number of pockets of the AI trade and some other sort of peripheral things on policy. Where's the money coming from is great. There is a lot of excess global liquidity right now. A lot of it's coming actually out of China, funny enough, because the rest of the G7 is kind of contracting. We're seeing certainly contraction in the U.S. as sort of the RRP has drawn down and TGA has filled back up, which means when you think about what's available to go into financial assets, it's fallen in just specific to the U.S., but on a global level, it's still rising.
You know, it's funny because it seems like everything is rising no matter what. So the dollar is strengthening because the yen and euro are weakening, and dollar assets are going higher. The yen is weakening, and we've seen Japan do fantastic. I have to ask you about China, because I was looking this morning. The Hang Seng Tech Index is up something like 50%. The Hang Seng Healthcare Index is up 100% since the beginning of the year. Is the China rally done?
No, I don't think so. I think China's fundamentals have at least bottomed, so people now are more comfortable with how policy is affecting real economic activity. Clearly, we still know there's debt overhang, property market concerns, but the tech industry's gotten super interesting. The demographic story there does support the healthcare story, and the AI kind of play seems to be earlier innings than our own AI play. And it's taking a different route with sort of this open source algorithmic use of maybe lesser kind of quality chips. Jensen Yang was just on a competing station and said all this about China as being very positive, and we can't underestimate what's going on there with AI.
I mean, I guess, you know, one doesn't have to be a loser for the other to be a winner, right? It's doesn't have to be a zero-sum game. All right, Bloomberg's Michael Ball, thank you so much for all of that context. Let's get a check on those markets now, because just a few more minutes before we open, we have futures higher to the tune of 0.4% for the smaller caps. We have S&P futures, obviously Dow futures, Nasdaq 100 futures, all higher. Yields-wise, the story is probably elsewhere, Japan or France, for example. We're not seeing too much movement in US yields at the moment, down about a basis point or two across the curve. We have that auction coming up at 1 o'clock, and we'll see what demand does there. I mentioned the dollar. The dollar index is stronger, almost at 99 on DXY now. Sterling, no change, but euro is weaker, trading at 116.39, and the yen earlier was about to top 153. Right now we're trading at 152.43. Coming up, more insight on the AI bubble, if there is one. Bloomberg's Dani Berger will sit down with Thoma Bravo founder Orlando Bravo at the LAVCA conference here in New York. We'll bring you that conversation. And Blue Origin is set to launch its 15th space tourism mission. We'll bring you that launch live later this hour. This is Bloomberg Open Interest.
For generations to come. When our descendants look to the stars,
now to high interest, a look at what's making headlines around the world. Senate Republicans are rebuking the White House for suggesting furloughed federal workers might not get back pay once the shutdown ends. GOP Senator Susan Collins said Congress settled the issue years ago when it guaranteed those payments by law. Speaker Mike Johnson suggested yesterday that the administration is under no legal obligation to compensate furloughed workers. Speaker Johnson will join Bloomberg TV on Balance of Power today at 5 p.m. New York time. JP Chase will open its new $5 billion headquarters at 270 Park Avenue, that's 47th Street, this month. It's one of New York's most expensive building projects. The 60-story tower will house about 10,000 workers and will anchor what's becoming JP Morgan's own Midtown campus. CEO Jamie Dimon personally oversaw the design, right down to a Guinness-ready pub on the 13th floor. The new building can be seen as a manifestation of JP Morgan's dominance in global finance, also Dimon's reign over the company. Jefferies revealed a $161 million exposure to the bankrupt auto parts maker First Brands Group. Most of that stems from its Point Bonita Capital arm, which manages trade finance funds and holds a $113 million equity stake. Another $48 million is tied to loans held through Apex Credit Partners, a CLO manager half-owned by Jefferies. First Brands filed for bankruptcy on September 28th after halting payments on receivables and scrapping a $6 billion debt refinancing. The big debate on Wall Street is how long this AI-driven rally will last after a wave of deals involving Nvidia and OpenAI escalate concerns that interconnected business transactions are artificially propping up the tech market. But Goldman Sachs chief global equity strategist Peter Oppenheimer says valuations are not a concern because of robust earnings growth. He argues that in past bubbles, the market was driven higher mainly by speculation. Let's bring in Amanda Agati, Chief Investment Officer for PNC's Asset Management Group. Amanda, where do you fall on this? It seems like every time there's a small sell-off now in the equity market, these warnings just come thick and fast.
Good morning. It's great to be with you. I'm in the Goldman camp. I think that valuations are fairly full at the moment, like if you just look right in front of you. But if you zoom out and look at the trajectory for earnings growth and the path for fundamentals, I actually think there's a scenario here where valuations may be a bit undervalued on a relative basis. So we're believers in the trade. We think there's a long runway. It's very early innings. And as use cases expand, I think that earnings growth trajectory just accelerates from here.
Paul Tudor-Jones said this week that the fiscal and monetary brew that we have right now is not something that we've seen since literally after the war. And it is true, right? We're also flying blind. We're in sort of a data vacuum as well. So we're not even sure if whatever the Fed does next is the right thing to do. The Fed may not be sure. How can you be so confident that, things won't come crashing down?
Well, it's hard to be 100% confident in an environment where we've been talking about the purple haze of policy uncertainty all year. And so there's, of course, a lot of unknowns and, maybe it's a little bit different this time and some volatility around policy. But when I look at the hard data, the underlying data supporting both the economy and the markets, it's still strong. It's still good enough given where the market has rallied to and where valuations have moved to. And then with the Fed in rate cutting mode, whether it's a risk management cut or otherwise, that's very supportive of easing financial conditions. So I think the backdrop is pretty solid, even if it might be a little bit choppy from here into the end of the year.
All right, Amanda is sticking with us. PNC's Amanda Agati stays through the opening bell. Coming up, Bloomberg's Dani Berger sitting down with Thoma Bravo founder Orlando Bravo at the LAVCA conference here in New York. We'll bring you that conversation next. This is Open Interest. Happening right now, Bloomberg's Dani Berger is speaking with Thoma Bravo founder Orlando Bravo at the LAVCA conference here in New York. Let's listen in.
And if you have the best run company making the right investment decisions, you can invest plenty in AI because you're not wasting a lot of money in other activities or trying activities that the company doesn't even have a core competency in doing.
Well, considering you've done that to so many companies, I'd love to know how you're using AI internally. What about Thoma Bravo's own processes? How are you utilizing AI?
To grab information. It's really, and I think most companies are using it that way, right? We all as consumers use it to ask questions, get quick data, search. Companies as well are using it in that way. We're using it to get information a lot quicker. For example, at the end of the quarter, we love those quarter ends. Now it's October because companies have a January fiscal year end. That's something that SaaS companies did a while ago. But as we come to the end of October, instead of me having to call every single partner across our portfolio of 60 companies, I just know the bookings results. And you kind of can consume that pretty quickly and say, oh, are we in good trends? And that really informs how you invest in companies as well. All your pipeline of deals, is the industry slowing down? Are customers buying more? But the ability to consume information very quickly and data is how we use it.
I talked to one of your competitors who maybe will remain nameless that said that they were experimenting with an AI IC member, that they would feed it all of its information and all the decisions they made. And you'd almost get kind of a vote, or she, I don't think we can gender these things, on the IC. Would you ever do something like that? Would you use it for actual decision making?
That would be pretty cool. I mean, we would, and I've heard some VC firms have done that as well, and this IC member shows up and then has the most power, and how could they possibly be wrong? They have all the data, the super brain. That would be fun to do at some point.
Okay, well, you have to let me know.
The thing is, see, Dani, the thing is, all these things are very helpful right now, but you try to think of your time during the day. I always tell our team, private equity, you have three things to do. Get the money, get the deal, and improve the deal. If in your 18-hour day, if you really want to stretch it that way, 7 days a week trying to crush it and make money for LPs in an ultra-competitive market, you're not spending time on those three, maybe a competitor is going to do better. So you have to be careful how much you're levitating and investing in projects that are intellectually interesting versus actually getting that deal, which, as you know, many practitioners here, it's very hard to convince a company that's worth $10 billion to sell it to you, no matter how poorly they're doing. And it's a day-to-day, we do controlled deals only, it's a day-to-day effort to improve the company. The head of sales quits, now you got a problem. The pipeline is low, you have a problem with a competitor, you have to take out the cost, you have to track that company on a monthly basis. For example, we do, instead of quarterly board meetings, given the intensity of our operations, we do monthly operating reviews, 8 a.m. to noon with every single company, all the direct reports in the room. And these processes are, that is the alpha that our industry looks for. In software, it is incredibly huge. When we started in software, the average software company lost money. Today, and after the industry became this 1.5 trillion, the average publicly traded software company loses money. There has been no operational improvement in the public markets in almost 30 years in the way software companies run. Now, groups like us, we started small.
That was Bloomberg's Dani Berger speaking with Thoma Bravo founder Orlando Bravo at the LAVCA conference right here in New York City. You can continue to watch the full conversation on your terminal at Live Go. A check on markets now ahead of the opening bell. Well, we are in the green, so you can relax. It looks like we're going to snap that one-day decline after having had 8 sessions of gains, with more gains today. That said, gold well above $4,000 an ounce. And Bitcoin is also rising. This is Open Interest. Moments away from the start of trading, this is Bloomberg Open Interest. I'm Bonnie Quinn, stepping in for Matt Miller and Dani Berger. We saw futures were pointed higher, so we'll get the beginning of trade now, and we'll see if that continues on. Meanwhile, down at the New York Stock Exchange, we have Empire State Realty Trust ringing the opening bell. It's the 47th anniversary of the run-up, and that is happening today. So if you're not watching these markets, maybe you want to take part in the 47th run-up, the Empire State Building. Meanwhile, over at the NASDAQ, we have Palm Doctor ringing the opening bell, a Chinese online medical platform. And they are listing ADRs in the United States today. So some stocks to watch then. Keeping an eye on the drivers of the AI rally amid all of this bubble talk. We have Nvidia, some of the neo clouds as well, Coreweave. The big take on Bloomberg today noting never before has so much money been spent so rapidly on a technology that for all its potential remains largely unproven as an avenue for profit making. Many companies would say that they were unproven until they were proven, right? So we have Coreweave up about 2%, Oracle, which had dropped yesterday, up about 0.5%, and as you can see, Nvidia up 1.1%. So that trade seems to be reversing once again today. And then, as you can see, just index-wise, we have a nice rally getting going on our hands, up 0.2% for the S&P 500 and the Nasdaq 100 apiece, and the Russell 2000 index more than that, up about 0.5%, so the small caps benefiting from this bounce back today. Still with us, Amanda Agati, Chief Investment Officer for PNC's Asset Management Group. So Amanda, as we know, the market likes to look at one narrative at a time. At the moment, it does seem to be all these bubble warnings and the AI narrative taking hold, but at some point we'll return to the economic fundamentals, right? And the fact that we are 8 days now into a shutdown. Next week we may not get data, including inflation data, and workers may not get paid, even pay that they are owed in the next few days. At what point does that narrative take hold?
Well, it's a great question. And I think it's already starting to take hold, right? But the market is presuming that this is going to play out like it has played out in past government shutdown cycles, that with a lagged effect, stimulus and liquidity will come back into the system, workers will be made whole, and will sort of fill the soft patch that gets created from an economic activity perspective, and will carry on. I think what's a little bit different this time in terms of the narrative is, the headlines around, are there actually going to be firings? Are folks not going to get the back pay that they would have historically? And so, it's creating a little bit of volatility, but I think the market is viewing it as really more of a bargaining chip and trying to bring parties together to the table to negotiate, as opposed to something that's really set in stone. So I think, it will start to bite, certainly. By the time you get to the second payroll check, it's really starting to feel painful for workers. But I think, presuming, that we do eventually get to a resolution here, the market's just going to continue to look past it.
Yeah, I mean, Paul Donovan of UBS this morning saying that if the furloughed workers don't get their back pay, you would not see the bounce back for the economy that you normally would after a shutdown. So that's concerning. But also the very fact that we're so reliant on this consumer staying strong. How convinced are you that, more broadly the economy can stay strong if federal workers, some of them get fired and some of them don't get back pay?
Yeah, well, it's an important consideration for sure. I mean, our base case is that does not play out, but to the extent that it does, it certainly puts the brakes, I think, on economic growth, maybe more severely or harshly than what we were expecting. We're already expecting a bit of a slowdown here into the end of the year, even though the first half has come in stronger than expected on a relative basis. But there have been a few cracks in terms of the data, that big seasonal revision in terms of claims data that we saw not that long ago. So definitely watching the labor market very carefully in terms of whether this is just another sort of impact. And I think it really sets the stage, even if we don't have the data, for the Fed to cut again. Even, they said risk management cut in September. I think they have to take a step to cut again in the face of some of this uncertainty in October.
So we have the VIX just back below 17 again. Amanda, it was obviously above 17 for the most part of the session yesterday. Are you concerned that perhaps this market is just a little complacent, or is that really reflective of the risks and challenges that are out there right now?
I always worry a little bit when volatility gets too low, right? It's sort of that contrarian point of view. Like, surely there should be a little bit more choppiness and noise in the backdrop, particularly given, as I said earlier, some of the purple haze of policy uncertainty that continues to swirl. But I think the market is right to really sort of cut through the noise and the haze and focus on the underlying data. And so, to the extent that the earnings growth backdrop continues to be sound, we have Q3 earnings season like literally upon us here, and all the revision trends coming into the end of Q3 have been positive. So I think the market is right to kind of focus on the fundamentals. The trajectory looks really strong into the end of this year and a reacceleration into 2026. So to the extent all those things hold, maybe it is okay to be a little bit complacent here in the short run.
Amanda, the yield curve has been incredibly stable for the last couple of days. I know we had a little bit of, jitteriness in the last couple of weeks, but since we got down to the 470, 475 mark, say, on the 30-year, we've more or less stayed there. Same for the 10-year, around 410, 415. Is that where we stay through the next Fed meeting and beyond?
I think it's a great question. I think the odds are that the longer end of the curve continues to kind of push a little bit higher on a relative basis, even if the Fed continues down this path of rate cutting. It's sort of a deja vu all over again dynamic with about this time last year where the Fed started cutting and we immediately saw rates start rising. And so I think it's really more a reflection of the deficits and debt level concerns that continue to swirl. Bond market not giving policymakers a lot of room to spend more relative to kind of where we are. So I think that dynamic is still very much in play. I think the curve continues to steepen a bit, but definitely some pressure upward on the longer end.
Amanda, how much are you advising clients to be invested outside the United States, and where would you be looking right now, given that we've had run-ups in so many places?
We're very well diversified in terms of our equity asset class exposure, but we continue to be tactically overweight to the U.S. relative to international. It is really hard to bet against U.S. equities, and in particular U.S. large cap, in this environment, given all of the talk around AI, automation, robotics, et cetera. It's hard to find those exposures in other parts of the globe and is in a concentrated fashion. Some view that as a risk. I view that as an opportunity. So we're tactically overweight the U.S., but also I think there's some interesting exposures in emerging markets as well, again, around technology, automation, growth. And so our view is at a time where growth may be starting to slow, both in the US and across the globe, investors are willing to pay up for growth. So we're looking for those growthier exposures on a relative basis.
You know, we're about to head into earnings season again, and you know, I've heard it said in the last couple of days that financials have been undervalued, for example, and that maybe it's their turn in the sun at this point. Same for small caps, they've had a rough go of it. Does this next earnings season look very much like the last few earnings seasons, where we're all depending on the AI companies and the AI-related companies to beat, exceed? You know, we want companies to mention AI, to talk about CapEx spending and so on. Or do we get back to the sort of earnings season of yore where, you know, we're looking to all the other sectors too?
Well, I'd like to say that market breadth should be the story for Q3, right? At the beginning of the year, we were focused on, okay, it can't just be about one name or the top 7 or 10 names driving the earnings growth backdrop. It's certainly been driving the price backdrop, but we need to see broader based participation. And as this year has played out, we've started to see better improvement in participation beyond, let's say, the bottom 490 in the S&P 500. And certainly small caps have reasserted themselves with the Fed cutting rates here. So I do think that market breadth story is real. Is it as good as what I would like to see? Probably not, because I think, at least in the case of small caps, we're only just starting to see that turn as financial conditions ease. Like we just started getting some more Fed rate cuts. So I don't know that it has really had a chance to sort of permeate fundamentals. It's really more of a sentiment trade. But I would expect going into next year a decent amount of expansion in market breadth. And when you look at earnings growth, it reflects that too. We've been slicing and dicing between including the top 10 names and excluding them. And there's been this sort of this wide, cavernous, sort of vast space between with and without. And so that changes quite a bit going into 2026. I think it's a function of expanded use cases. And so I think that's good news for the market rally to continue. It
does feel like one of these quarters we're going to have our eyes open for us. PNC's Amanda Agati, thank you so much for joining. We want to go now to Van Horn, Texas, where Blue Origin is launching its latest new Shepard crewed flight. The mission is the 15th human flight for the new Shepard program. Bloomberg Tech's Ed Ludlow joins us now. The 15th crewed flight, Ed, it seems hard to believe that we've actually had 14 of these, right? I mean, there was the one obvious one with celebrities aboard, but all the rest of them have had sort of regular scientists. And tell us a little bit about this one. Who's going to be on this one?
Yeah, I mean, prior to this mission, 75 people have gone to space, technically, with Blue Origin above the Kármán line, and we can get to those stats. You're looking at Blue Origin Launch Site 1, 30 miles north, approximately, of the town of Van Horn, which is a dot on the map in West Texas. And what you need to know for our Bloomberg television audience is that you put a $150,000 deposit down. There have been leaks and reports that the total ride could cost anywhere from $200,000 to $500,000 for a few minutes of weightlessness. But they're going to be traveling up to that orbital height for just that 3 minutes at almost 2,000 miles per hour, Bonnie.
Yeah, but they can walk around, which I hadn't fully realized, Ed. So they get told almost like you would in an aircraft, you know, now is the time to sit back down again because we're going back to Earth. You know what I thought was fascinating? There are 5 repeat customers. What didn't they see the last time that they need to see?
Yeah, I guess it's just the experience of weightlessness. There is a program that runs in the weeks and months before mission day. The training is very severe. They are taught to get out and then get back in and buckle up before it's too late. And, you know, in that time, it's the ability to see the curvature of the Earth. Why don't we just take a pause and listen into Countdown?
Yes, we're just about to get to the 10-second mark.
9, 8, 7, 6, 5, 4. Command engine start. 2, 1.
Shepard has cleared the tower. If you look on the bottom right-hand side of your screen, you'll be able to follow along for the timing as NS-36 heads towards the Kármán line.
Pressure looks good. "10,000 feet and climbing. Beginning throttle down for Q limiting.
A little bit of a cloudier day out in West Texas today, but you can still see New Shepard.
Good. Max Q, maximum dynamic pressure.
On your screen there, you can see the telemetry on the left-hand side bar. You can follow the flight trajectory today. At the bottom, you can watch the speed and the altitude.
All right, so a few little clouds there did not deter from that spectacle of that launch. Ed Ludlow, Bloomberg tech anchor, let me bring you back in because there are certain milestones that we need to watch out for here, right? But this is possibly the most enjoyable part of it, at least for the people inside.
Yeah, that's right. So they just talked about max Q. That's the moment of sort of maximum aerodynamic pressure on the vehicle itself. You can think about the kind of force that the crew inside are under. It's going to kind of throttle up to a speed of about 2,000 miles per hour. And if you look at the left-hand side of the screen, you can see the counter on the speed going up. It's a cloudy day, but you can just track through the cameras and the onboard cameras looking down. What you're looking at there, Von, is at the bottom of the New Shepard vehicle, it's a single BE3 engine. And what's kind of cool about it is that the engine uses a fuel mix of liquid hydrogen and liquid oxygen. So as we're about 2 minutes into the mission, we've hit that supersonic speed around 2,000 miles per hour. And in about 15 seconds time, that actual single main engine will cut off and just use momentum to carry it out of Earth's orbit, out of Earth's atmosphere, and into that orbital height where they're going to have a few minutes of a zero-G environment.
You have to wonder if you get a discount if it's a cloudy day, right? I mean, the views can't be quite as good as if there were no clouds in the sky at all, I guess, Ed.
Yeah, I mean, part of it is that the max altitude or apogee is about 105 kilometers above the Earth, or 65 miles. And so part of the appeal to those paying on board is the ability to see the curvature of the Earth from that height. They are hitting that apogee as the Blue Origin staff are going through on the feed. And what we're waiting for next is that confirmation of stage separation, which you can see now. So very simply, the capsule atop of the booster separates off. The booster, as you know, is reusable, so it will now fall back down to Earth, and we'll track that for the chutes to open at the 8-minute mark. But on the left of the two specs, that's the capsule. So right now you have the crew on board, and maybe, Vonnie, if you want, we can go through who they are. But they will now be doing that 3 minutes of weightlessness.
Yeah, so there are 6 of them. One asked to remain anonymous until at least after the flight, I guess. If all the cameras are on the door when the flight is finished, then they're not going to be able to remain anonymous. But they certainly wanted the experience to be anonymous, at least.
Yeah, so, I mean, if you're watching Bloomberg Television right now and you've got a few $100,000 of change, you know, you can go on board Blue Origin, apparently, and remain anonymous until the mission's complete. And we'll find out who that is and the reasons why. But this is an interesting mix. I mean, for our audience, maybe Jeff Elgin is the most known, you know, kind of franchisor and franchise industry giant over the last several decades. There is a media mogul, Dana Karagasova. A pretty well documented and known electrical engineer, Dr. Clint Kelly, who's been a leader in the field of autonomous vehicles. You have Aaron Newman, the serial entrepreneur in the software domain. And then finally, Vitaly Ostrovsky, who's a Ukrainian businessman. He's somebody in the world of real estate and in hotel franchising. But this is kind of the extent of the business model we're talking about, Von. It is an expensive ticket for 3 minutes of weightlessness. And this particular New Shepard program, you know, people call it space tourism, right? But we also acknowledge that Blue Origin has much grander ambitions in the field of commercial space.
For sure, and it's not alone either. I'm curious, Ed, they're called crew, right, for a reason. I mean, I guess there's nobody else on board. So
correct.
What is it that they have to do when they get in, if anything, or is the whole thing done from mission control?
Correct. So the vehicle is essentially fully autonomous. You just heard on the Blue Origin feed that they got the 1 minute warning. So they have the remaining 1 minute of weightlessness. Then the crew members who have been through a pretty rigorous training program need to put themselves back in their seats and buckle up for the return journey. They're in a capsule, and this is good old-fashioned rocket science, or at least rocket system science, where the flat bottom of the capsule and air resistance will slow them down initially once they come back into Earth's orbit, and then we'll go through the sequence of the parachutes being deployed. But on the ground, there's constant communication with the control leaders of that mission. But again, the system is fully autonomous, which is when we do these on Bloomberg Television, or you just tune into the Blue Origin feed, we track the timing of liftoff so precisely.
It's amazing, you know, we have autonomous vehicles in the sky, but, you know, there are problems surrounding the autonomous vehicles on Earth, although I guess they don't have a mission control at the same time. Maybe that would be the solution to all of their problems. So, Ed, I don't know if you've ever been inside one of these things, but can you tell us a little bit about what they look like, if you have, or if you've seen detailed pictures? I mean, it looks like you'd be very, very much beside each other, at, you know, where they're standing, but that there's a lot of room above.
So, Vaughn, I've not been into space. People ask me all the time if I'd go. I'm pretty comfortable down here on Earth, but I have been up close to the Blue Origin capsule. Think about 6 seats around the perimeter of the capsule, slightly reclined with a window in each. It's a very limited space volumetrically. The windows are large, like 2.5 feet by almost 4 feet. So that's kind of what you're paying for when you get up there. And the tagline for Blue Origin has always been, every seat's a window seat. So this is the booster coming back down to Earth, right? And as it's approaching the ground, that BE-3's burning. Slowly, 6 miles per hour or less, and
we
boop.
have
Wow.
Yeah. Pooped.
It is a sight to behold.
7 minutes, 30 seconds.
Yeah, it's a real sight to behold. And the other thing about this, Ed, is that these have become very reusable now, right? I mean, at some point, we're going to get to the point where these are like airplanes. You buy a few and you get to use them for years.
Yes, so New Shepard is the less powerful of the 2 systems that Blue Origin has in its portfolio. It is a fraction of the size and power of SpaceX's Falcon system, which delivers astronauts to and from the ISS, for example. And there is clearly a limited mechanism here. This is NS-36, right? But we talked about how it's the 15th human spaceflight mission. They also intend to use it for other things, right? In a zero-gravity environment, you can do scientific experiments. You can even do commercial experiments in the domain of cosmetics, for example, using a zero-gravity environment. Some of it's to do with that. But the reusability changes the economics of it for sure.
Obviously, Jeff Bezos and the whole of the staff of Blue Origin will be excited. This is the 16th now voyage, let's put it that way, even though they're only, 10, 11 minutes long. But what's the next step? Because if they don't keep iterating with extras, they're not going to get anywhere, right? So what's the next ambition for Blue Origin?
So the other vehicle I was talking about is New Glenn. Blue Origin has big picture ambitions to build infrastructure in space, modern day commercial factories and space stations in orbit. It is competing with all of the other leading space companies to get contracts through NASA for both scientific research, for the ambitions of the agency in the United States in the domain of the moon and further afield. But Jeff Bezos' whole big picture, right, is slightly different to Elon Musk's. Musk is all about making humans an interplanetary species. Bezos is very much about infrastructure in space, factories in space, mining asteroids for resources. I'll leave you with this, Bonnie. The drogue chutes deployed. Those are the main chutes. We're 10 minutes into this flight. Over the course of the next 90 seconds, those 6 people who've paid a fair chunk to have that journey are just floating back down to space slowly, and hopefully they land not with a thud, but with a nice little boop.
What a day to fly, too.
A nice little boop. There we go. Yes, I imagine that they are very pleased to be back on Earth, although maybe they enjoyed space enough to want to go back up another time. 5 of them, after all, have done 2 trips. Bloomberg Tech's Ed Ludlow, thank you so much for joining us for that. It's always a spectacle. Well, Ed mentioned Elon Musk, so let's turn to Tesla now. The company revealing 2 new, cheaper models. The move is an attempt to drive sales as the EV tax credit is set to expire. For more now, we are joined by Bloomberg Global Autos editor Craig Trudell. So we're moving from one form of transportation to another form of transportation, Craig. But tell us a little bit about these new cheaper models, it had been thought that maybe they wouldn't sell so well. Is there any sign that maybe the market is changing its mind now?
I think it was really important for Tesla to have something to offer in light of the fact that the $7,500 tax credit was going away. They needed to put something to market that was going to make their vehicles more affordable. It's something that Elon Musk has emphasized a long time. I think what has befuddled a lot of people is the idea that this company has completely, it seems, abandoned a previously targeted price point of $25,000. So, a smaller car, a Model 2, if you will, it seems to be completely off the drawing board. And instead, we have sort of decontented, less attractive versions of the Model 3 and Model Y that you sacrifice a fair amount of features for this lower price that they're offering on these new standard versions of the Model 3 and Model Y.
I mean, were they built specially, Craig, or were they just sort of Model 3s that weren't selling that, the engineers went in and pulled out a few elements out of? Or how does it work? Do you retool a factory for this?
Yeah, I think it is definitely the case that there is going to be or has been some small disruption to where these vehicles are made. These are far and away the most important for Tesla. Roughly on the order of 90% of their sales being the 3 and the Y. The S, X, and Cybertruck are the other models, and they don't even sort of get broken out in this company's quarterly delivery statements, and so. These have been the models that are sort of carrying the water for this company, but until the third quarter, it was a company that was really struggling. Both in the first and second quarter of the year, sales were down 13% each of those periods. And with the $7,500 tax credit going away, there's real concern about just how much of the third quarter showing was a sort of pull forward, and are we going to see this real cliff in the fourth quarter now that those incentives are away? And we've heard Musk himself, Elon Musk, referred to this idea that Tesla could be in for a few rough quarters because of those incentives falling by the wayside.
Do we know anything yet about the political fallout, Craig? We were wondering if, people would drop off as fans of Tesla or people would onboard as fans of Tesla. And Elon Musk himself had said what we lose on the left, we gain on the right, and so on. Is that becoming obvious at all in any data?
I mean, I think it's particularly clear in Europe just how hard a time Tesla is having over here. While we did see, strong third quarter numbers, what we saw consistently throughout this past quarter was that was not reflected in Europe. So that really sort of leads folks to believe, I think, the fact that also in China, this company is having a hard time keeping up with more and more competition. It really sort of by process of elimination leads you to conclude that, the fact that this company did have a good last few months was driven by this run-up of demand to take advantage of that tax credit before it went away. And now that it's no longer available, can they get back to where they were before Musk more assertively, put himself in the political conversation? He's stepped back somewhat from that, I guess, just by virtue of not being in Washington every day. But he's still, of course, extremely, extremely vocal on X and on quite divisive issues, and that could be a risk for this company for quarters to come.
And that stock down 2/3% right now. Our thanks to Bloomberg's Craig Trudell for that. It is an up market, though. Let's check on stocks more broadly. We have the Nasdaq 100 now up 0.5%, the S&P 500 up about 0.2%, so a little less effusive in its praise. The Dow is actually down by 0.2%, and the VIX is back above 17. The dollar index, DXY at least, is stronger by 0.2%, thanks in particular to a weaker yen. Coming up in the next hour, we'll speak to Tesla investor Ross Gerber about the models. Simplifies Paisley Nardini joins too. Markets in the green. We have the S&P 500 up 0.2% now. That Nasdaq rally continuing after a very, very one-day brief pause, and it's thanks to technology shares. Dell is the best performer right now, up more than 7% in this session. We're looking at AMD, Micron. So many tech companies are rising. This is Bloomberg Open Interest. I'm Bonnie Quinn, stepping in for Matt Miller and Danny Berger. Coming up, the debate around an AI bubble getting louder. Billionaire Ray Dalio says the rally feels frothy. Goldman, though, dismisses bubble fears. A golden milestone, gold smashing through $4,000 for the first time as the US shutdown fuels that rally. And Tesla unveils a cheaper version of its most popular electric vehicle. Investor Ross Gerber is not impressed by the reveal. He joins the show this hour. We begin with the AI bubble debate heating up. Thoma Bravo's Orlando Bravo spoke with Bloomberg earlier about the future of AI at the LAVCA conference here in New York.
AI is going to be transformative. It's going to be so powerful. It's going to be so exciting. And it's very, very new and very early. So many people will be are paralyzed now, including LPs, to say, do I touch this area, a services company? Do I touch a software company? Is this going to be disrupted? I just get these inputs all the time of how everything is going to change overnight. It will change significantly, but it will be an evolution.
Let's continue the conversation now with Paisley Nardini, Simplify Asset Management Head of Multi-Asset Solutions. So Paisley, where do you fall on the divide? At this point, there seems to be a big divide between those who think we're absolutely at the edge of this, quote unquote bubble bursting, and those who think, look, there's a long way to go, nothing is proven yet.
Yeah, well, thanks for having me. Good morning. I would say there is quite a bit of hype, as we've all seen. I think a lot of what's carrying this forward also is the just broader trade and momentum. What gives me a little bit of peace of mind, though, is really looking at the fundamentals of a lot of these stocks and a lot of these companies. Whether it's 30, 40% of some of these tech companies are making up some of our broad-based indexes. Again, comforting that anywhere from 30 to 40% of the earnings in these indexes is also comprised from these same companies. So fundamentally speaking, sound. But I do think there's caution. We started to see even some of these technologies companies themselves coming out and raising concern around the ability to project forward guidance and strength going forward. So a lot to be determined. But it is a strong part of the economy, and I think that's what's risen or kind of lifted this up over the last couple of years.
Paisley, were they so mispriced before? I mean, if you look at Dell today up more than 8% now, it is just on a tear. We have Arista up, almost 6%, Micron up another 4%. It speaks to a market that was not valuing these companies correctly just a few days ago, if this is what they're valued at now.
Yeah, unfortunately, with rising tide, we also are going to see heightened volatility. So some of the idiosyncratic risk amongst these companies, I think they're going to just be subject to higher volatility. But again, if we think about what's driving this and we think about the broader universe of which investors have to select from, technology stocks, communication stocks, this is where the bulk of future earnings growth is coming from. This is what's giving really the rise or the lift to markets broadly. So some of these kind of earnings reports that are coming to market, I think, is going to subject volatility, which is why we're really looking at ways to diversify away from this. And I think an interesting statistic that I saw in the last 24 hours, I think Jim Bianco actually put it out, is some of the concentration in both the NASDAQ 100, which is more that technology-driven sectors, and the S&P 500. They have the same top 8 companies listed within them. And so as an investor, if you're thinking about opportunities and where to invest, I think we're underestimating the importance of diversification for those reasons you mentioned.
For sure. Just to stay on the AI trade for one more moment, the report about Oracle's cloud margins, if that turns out to be true, is that just something that we have to wait to get fixed? Or is that something that really should give us pause, that maybe there is no extra revenue to be made from all of this rental and, this cloud rental business?
Yeah, again, I think thinking about ways to diversify our risks, a lot of these companies have delivered really attractive, strong fundamentals. The earnings were quite resilient. I think we'll continue to see that broadly, but I do think what we'll continue to see is less of this rising tide lifts all boats and some of the thoughts around how can individual companies kind of start to lead the pack. So that just drives us to more concentration ultimately. And so rather than just grabbing the market kind of broadly, thinking about ways to kind of parse out specific exposures and get ahead of some of these companies that may face headwinds.
So if we're looking at an easing cycle continuing next month, and perhaps actually it's this month, and perhaps December again, what are the sectors in this market that benefit and that haven't already priced in that easing?
Well, I think we started to see a bit of this occur in August of this year as the Fed started to articulate the expectation for rate cuts, which did come to fruition. We did see a pretty strong boost to small cap stocks. I think the market at large anticipates that to persist if we remain on this current trajectory of easing, which is a little bit slow, tempered or measured pace of easing. I think if we start to see hiccups in the labor market data, which I know a lot of us are waiting patiently for a lot of that data to start being distributed again after the government shutdown. But if we start to see cracks in the labor market that would result in the Fed starting to ease in a more quick or a fast fashion, that ultimately might be concerns for some of those small cap stocks. So it's a little bit of kind of this balancing act of the market appreciates and wants to see more monetary policy easing. But at the same token, if this starts to accelerate, that would be caution for some of these smaller cap companies in these more volatile parts of the market.
You know, you mentioned that typical cautionary signals are not exactly flashing signs of concern. You know, you mentioned spreads and so on. We actually had the Bank of England talk about auto loan defaults today, which I thought was peculiarly specific. So there may be one or two little red flags out there. Is gold a red flag, or is it trading above 4,000 for other reasons?
Yeah, great question. I mean, gold has absolutely been in focus for the last couple of weeks and even just the last 48 hours. It seems like every headline I read is related to gold. This is a bit of that, what I mentioned earlier, some of this momentum trade. I think a lot of retail investors are starting to see flows. They're chasing some of this price momentum. We do think that gold does have staying power. I mean, it's been in motion for the last really 12 to 24 months, driven by foreign central bank buying. I think what's kind of more in focus in the last 48 hours is this idea around debasement, ultimately losing faith or credibility or value in, say, U.S. assets or the U.S. dollar. And then ultimately thinking about what that means for duration assets. We've seen the long end of the curve remain elevated. That's a bit sticky. And so just the trends that we've seen in gold and the ability to diversify away from fixed income risk, ability to diversify in this era of uncertainty. And so we see commodities broadly and gold in particular being kind of that main catalyst or wave that clients can think about diversification in their portfolios.
Okay, so that's one way to protect against drawdown risk. Do you have other options for investors?
Yeah, ultimately, we think that it's not the time to take your foot off the gas pedal. Ultimately, as we're hitting a, 3-year anniversary of the beginning of this bull market, I think that leads a lot of people to think, okay, it's time to get out. But what we've seen historically is that when bull markets reach this stage in duration, it typically has resulted in longer time horizon of markets continuing to move higher. So we actually think this is a bullish signal. But going back to your question, keep the foot on the gas pedal, but think about ways to diversify and hedge some of your risks. So whether it's putting in downside protection within your equity sleeve, whether you think about adding credit hedges, credit spreads are at historical tights, which to your point is telling the markets that there's no really concern from a funding perspective in a lot of these smaller cap companies. But ultimately, we think it's time to put on your hedges, take your foot off the gas pedal slightly, and really think about diversification into some of those more unique parts of the market, such as gold, commodities broadly, and even some long-short strategies.
All right, Paisley, thank you so much. That is Paisley Nardini of Simplify Asset Management. Now let's get a check on these markets because we are back to rallying. Took a day off and we're right back at it. Dell is up 8.5% right now, and that just speaks to the broader market because we are seeing the Nasdaq up more than 0.5% and the S&P 500 up 1/3%. About half the stocks in the S&P are higher, half are lower. So there are many individual companies that are not benefiting from this rally. The dollar index has been stronger, a little bit off the highs of the session now. We had a little moment of, I wouldn't say panic, but I'm sure in Japan there was wonderings if we'd get some verbal intervention because the yen was very close to 153. The euro at one point today was very close to 116. We're at 116.34 right now, so we're a little bit off the extreme levels that we saw earlier in the morning. Let's get a look at some single stocks moving at this hour, though. Shares of Oracle fluctuating on a report that the company's profit margin in its cloud computing business is lower than expected, with some analysts remaining optimistic. It's up now 2%. Confluent shares up more than 11% off their highs of the day, though, following a report that the data infrastructure company is exploring a sale after receiving acquisition interest. And we're also watching the gold miners as spot gold rallies past $4,000 an ounce for the first time. This all amid concerns over the US economy, the government shutdown, Fed independence. Oh, the list goes on and on. Coming up, Tesla reveals new, cheaper versions of its top-selling models, but not everyone is impressed. Investor Ross Gerber joins next. And GOP leaders are speaking right now on the government shutdown. You can watch these remarks on your Bloomberg. Just type in Live Go. Don't forget, Speaker Johnson will be a guest on Bloomberg Balance of Power. That's today at 5 p.m. New York time. All right, now to high interest, to look at what's making headlines around the world. Former FBI Director James Comey is pleading not guilty to charges that he lied to lawmakers and obstructed a congressional proceeding. The indictment alleges that Comey made a false statement under questioning from a senator during a 2020 hearing. The case has amplified concerns the Justice Department is being weaponized in pursuit of President Trump's political enemies. Blue Origin launched its latest new Shepard crewed flight from Van Horn, Texas last hour. This mission is the 15th human flight for the new Shepard program. The 6 passengers on the flight were treated to stunning views from more than 60 miles high and a few moments of weightlessness. It's a ride that 75 others have taken before them in the last 4 years, including obviously celebrities like Katy Perry and billionaire Jeff Bezos, the founder of Amazon, who also owns Blue Origin. Tesla is rolling out cheaper versions of its Model 3 and Model Y. The cuts aim to offset fading US tax credits that have slowed EV demand. The new models offer less range and fewer features. Tesla bull Dan Ives of Wedbush says he's disappointed by the new model since the price point is only $5,000 lower than previous models, but says any weakness in the stock is a buying opportunity. Let's continue that conversation now, because Tesla investor Ross Gerber also not too impressed by the big reveal. He took to X after the news broke, writing, quote, "If you buy this car, cheap Model Y or 3, you will lose money." Ross Gerber joins us now. Ross, explain a little bit what you mean. If you buy this car, you'll lose money. Are you saying that it's worth another $8,000 or whatever it is to have, say, an AM, FM radio station and a few other features?
Yeah, I was sad about the FM radio station being pulled, but myself, of all the features, to save money on. But I think for Tesla owners who've bought cars over the last 2 years, we've all lost money on the car from its residual value due to the lowering of the prices of the car on a consistent basis due to less and less demand. And with this vehicle, they've priced it at a price point where it clearly won't sell. So we expect the discounts to come probably within 30 to 60 days. So if you buy the car today for, let's say, $39,000, it's going to be for sale for $36,000 or $35,000 in the next couple months, is my guess. And that's been the trend for all Tesla vehicles that have been bought new over the last several years. So I caution people, you can lease vehicles from Tesla, which is a much smarter way to buy an electric vehicle than to own one.
I mean, partially people buy Teslas for the acceleration power, right? And some of the other features like that. It's not taking away those features, is it?
No, it's the slowest of all the Teslas by far. And so it just doesn't compare in any way to a Model Y, like a regular Model Y. They've stripped out some of my favorite things about Tesla, including the glass roof on top of the sound system. Being a music guy and a musician, the sound system in the Tesla with the quiet, it's such a quiet car to drive. You can put on Miles Davis and it sounds like he's sitting next to you. And to pull all this stuff out, it kind of is like ripping the soul out of what made Tesla so cool and unique. It's like they took the stuff out of the back seat so your kids can't watch YouTube and not bother you on a 6-hour drive, things like that. And so I just don't see the point of buying this. You can go into the used car market right now, buy a 2023 Model Y Performance for the same price as this car, and it's fully loaded. And Teslas are like iPhones. They just don't depreciate in the same way as traditional cars, and the software gets upgraded. So the most important thing when you buy a used Tesla is to make sure you have at least hardware 4, because hardware 3 cars are going to become worthless pretty soon. And so hardware 4 cars, a pretty new Model Y with low mileage, you can get a phenomenal deal, and it's a much better car.
So, Ross, why do you think they made the decision to do this then? I mean, was it really just to get around the fact that the EV tax credits were going away and, you know, it wanted a headline to be able to reassure those who wanted to buy a Tesla that they wouldn't have to pay all of that subsidy themselves?
Right, and that's the idea, is we lose the $7,500 credit, but we'll cut, you know, $5,000 worth of great things out of the car and sell a worser version of the car. And it doesn't really offset the pain 100% of losing the tax credit, first of all. But second of all, I think there's a cost to this because you cannibalize other models of the car who people just can't afford. And the car isn't that cheap. It's still $700 a month plus insurance. So when you're really looking at who can afford this car, they're not entering a new market of new consumers. It's really just to placate the fact that because of Elon, we lost this credit. So let's not forget who's to blame for this loss of this incredible benefit, which clearly people took advantage of last quarter because it was ending, and the credit worked and created huge demand for EVs. And this is a big step back for climate and the environment. And it's all because of the support for the current administration's anti-climate views. And it was supported by Elon himself. So, you know, no offense, but Elon, this sucks, and it's your fault.
Then, Ross, why aren't investors punishing the stock more? Because, yeah, we saw a little bit of a sell-off, but we're still very much close to our all-time highs. We're maybe $50
right
off the high.
Well, you know, if you don't believe in miracles, you know, now is a great time if you want to sell your Tesla stock to get this kind of premium for the company at 260 times earnings, which makes no sense. So the way we look at Tesla, and we own Tesla, is, you know, the core business is now worth about $150 a share, and there's about $300 a share of hope in the price. And so that hope is built around robotics and this cab business and full self-driving eventually working, which it still doesn't work. So, you know, people are willing to pay a bigger and bigger premium on hope now that Elon's doubled down and said that he's not leaving Tesla and all this kind of stuff. But in the end, over time, Tesla has to deliver, and they've got to deliver robots that work, which I'm not sure anybody really wants, number one. And I don't think they're ahead in this business. And they got to make this cab business work, which I think is really tough when Waymo works so well already and is already taking over city after city. I mean, where is there room for another cab company after Uber and Waymo and Lyft and many other robo competitors that are coming? So Tesla had a great business selling electric vehicles that were going to drive themselves, and they should have leaned in on that business. And instead, they've moved completely in a different direction. And a lot of people believe in this direction, and they're betting on it. And I wish them luck. I still own stock in the company because I've had it for all these years, and I have this emotional problem selling my last shares. But, you know, many of our clients own Tesla still and believe in this story. So we advocate on behalf of shareholders. And I think many people get confused by my position.
Sure.
I'm not a short seller.
Yeah, no, I hear you. So Tesla is losing out to competitors in sort of every area of its strategy right now. What does Elon need to do in order to meet the goals that his board has set for him so that he can earn those pots of money?
Well, that's the other thing. The way that comp package is set up, it's almost like a ridiculous board of challenges that all of which I think are pretty broad and vague, so they can easily be reached, unlike the previous comp package, which was much harder. But I think if you look at the comp package, you can see how confused the company is and how many directions the company's going. And instead, they really need to focus on the main thing that they need to solve, which is full self-driving. And Elon says it himself, if we can't solve full self-driving, there's no value in Tesla. And I agree, and even more so today than in the past. And so when you look at the problems with full self-driving, which I've analyzed now and used for years, I've been testing full self-driving for 5 years now, I'm convinced that they need to add LiDAR and they need to add more sensors and hardware to the vehicle to get it to work. And we know that it works with Waymo. I've taken Waymo through all kinds of tests now, and it drives better than humans. And so if we know it works with Waymo, Tesla and Elon need to sort of like get off their stubborn, egotistical high horse and start accepting that full self-driving doesn't work, and every day we fall further behind because he thinks it's a software solution, and it's not. It's a hardware solution, and he could solve this in 3 months if he just accepted that LiDAR needed to be put on the car. And that's where we're at. And so I don't see full self-driving getting solved anytime soon.
Well, maybe he'll listen to you today, Ross. Thank you so much. That is Ross Gerber of Gerber Kawasaki Wealth and Investment Management. Still ahead, billionaire Orlando Bravo weighs in on the AI debate that's raging on Wall Street. This is Bloomberg Open Interest. Let's take a look at the stock market now and right into the, I was going to say bowels of the stock market. Why not? Let's get right in there. We have about 265 stocks higher in the S&P 500, about half lower. But many of these stocks are the ones that were arrested in their rally a little bit yesterday. So we're talking semis. We know the semis were down 2%. We're seeing a lot of semiconductor stocks higher. Nvidia is the biggest points contributor, and that is obviously helping the overall index outperform among the major indices. But we have Apple, Broadcom, Advanced Micro Devices, and so on higher. Netflix, Tesla, the usual. It's the Mag 7 and beyond. Let's take a look at the groups, though, because that's interesting, because some of these cyclical areas are not performing so well. So you're talking, the home builders, you're talking utilities, you're talking consumer discretionary, just barely higher, financials lower, energy down about 0.6% as a sector. Well, coming up, we're going to be speaking to Mercato Partners CEO Joe Kaiser as the debate around AI heats up. A wave of deals in the AI space is sparking fresh fears about a bubble. Our latest Big Take examines the complex web of agreements that have Nvidia and OpenAI at the center, creating maybe a circular money machine fueling technology's biggest boom. Bloomberg Tech co-host Caroline Hyde joins us now. She's in LA this morning for our annual Screen Time conference, where the AI debate is going to not just come up in one conversation, but I imagine all of the conversations, Caroline. So talk to us a little bit about what's at the kernel of the concern here.
The interlocking and interdependence of success. Look, what we know when it comes to the generative AI boom that we're seeing is the infrastructure needs. Trillions is what Sam Altman has articulated as. And already in this investigation, the Bloomberg Big Take, they're saying about $1 trillion has been inked by OpenAI alone in recent weeks. We think of the money that they've gone to for Nvidia for equity, $100 billion gets put in so that they can then in turn keep on buying Nvidia chips. We know the $300 billion that is being inked with Oracle to provide compute to OpenAI. Then in turn, Oracle goes off and purchases GPU from Nvidia. And there's been a lot written by The Information, for example, about how thin those profit margins are for Oracle, probably only getting about 14 cents on the dollar for that infrastructure deal. And so we're seeing that basically there's a handing of money from one to the next to the next. It's been memeified, glorified. But the key question is, will they eventually make enough money to pay this back? And that's really what's at question here, Vonnie. Are we starting to see the productivity gains? Are we going to see OpenAI be able to really charge you and me, but the enterprises enough to vindicate the amounts of money that they're putting in to their own compute needs, but also into venture capital bets on some of their companies that actually use their underlying technology? Take Harvey, take Enisphere, for example.
Yeah, and it really is an interesting question, and many of the institutional investors seem to be willing to give it a little time, at least. And also, these things do take time. Remember when we were waiting for Nvidia margins to, expand again, and they are to a certain extent. Also, I want to bring up the example of Sam Bankman-Fried, if we can. I mean, he made big bets on AI, and they ended up paying off. So these kinds of bets that Nvidia is making, for example, another one today, $2 billion, is it possible that it will pay off handsomely for Nvidia?
Well, Nvidia is actually the one that's got the money, got the market capitalization, already making the revenues, but it's the way in which it's putting its money to work. Look, Kress, who is the CFO, Colette Kress has really been talking more broadly about how, yes, she could be giving more money back to investors, and she might in terms of the dividends, in terms of share buybacks, but they want to keep helping their customers grow and use generative AI. So that's why you see Jensen Huang on another network today talking about that, yes, he has put money into XAI. That was a huge scoop coming from our own Ed Ludlow and team. The fact that they are getting now a $20 billion round, Nvidia's put in $2 billion for that in terms terms of equity. It's an SPV that's actually using as underlying assets the GPUs themselves. Nvidia puts $2 billion into that in terms of equity for then that SPV to buy its own chips. But actually, Jensen Huang's saying, I wish I'd put more in. I want to back Elon Musk, and I want to back anything that he grows. And XAI, of course, is his big generative AI bet. But all of this is at a time where we do just question if we are getting a monumental bubble that's being built here. I think, really, Stacey Ragson was putting it beautifully over at Bernstein, saying Sam Altman at the moment is basically controlling the GDP, the world economy. He can either take us to the promised land of generative AI, or he could send the global economy into a spiral downwards. We've just got to decide which one of those that is. And unfortunately, as you say, it does take time. It's different from the dot-com bubble. It's not just startups feeding each other to sort of amp up their growth numbers in terms of buying advertising from each other and buying services. There is real money and real revenue and real spending going on here, but it just seems to be controlled by a very few numbers. At the moment, Nvidia is making the numbers. We need to see OpenAI start to make the revenue to vindicate it too.
Exactly. Caroline, thank you so much. That is Bloomberg Tech co-host Caroline Hyde in Los Angeles. And do stay tuned for Caroline's coverage from the Bloomberg Screen Time Conference, kicking off tonight at 9 p.m. Eastern with interviews from important newsmakers, including Netflix co-CEO Greg Peters. Also, Jimmy Kimmel is going to be speaking. Let's continue the AI conversation now with Joe Kaiser, Mercato Partners CEO and Managing Partner. So, Joe, I don't know if you managed to hear everything Caroline was saying, but this is essentially, the nub of the problem, right? We're waiting for the likes of OpenAI, the likes of Anthropic and so on to be making money and serious money out of this. And we don't know when or if we'll find out and when they'll make money. What is your best guess?
Well, good morning, Bonnie. I think, Monday was a unique turning point for OpenAI and where AI is going with Dev Day. I think 20 years from now, we're going to look back on Monday the same way that we think about Steve Jobs and Macworld in 2007 introducing the iPhone. Sam introduced the Apps SDK, which has complete disruptive capability for e-commerce. I think companies ranging from Google to Amazon to every other marketplace globally need to start thinking about what is going to happen when consumers start making purchases and all their purchasing decisions inside of ChatGPT. And then also with the agent kit released yesterday, OpenAI is now in a position where over the next couple of years, they can map enterprise workflows. So I think we are on the cusp of something huge and monumental when it comes to AI efficiency and AI's impact on our daily lives.
Joe, are you saying that, at some point it's going to be a little bit like how the social media networks make their money, that there's going to be a little bit of advertising involved, a little bit of, passing on fees from shopping and so on? And how many dollars per individual in the United States would you need in order to have all these companies be profitable for that?
Well, Bonnie, a good friend of mine, former classmate of mine, Ben Thompson, said OpenAI is becoming like the Microsoft Windows back in 1995. And my point of view, and Sam expressed this as well, my point of view is it's bigger because this platform could become an unprecedented advertising juggernaut. If you think of what they can do from causing consumer purchasing inside of ChatGPT, and then their partnerships ranging from Spotify to Zillow to Uber to DoorDash, and causing us to make purchases in real time, unprecedented. And then you think about what they're doing with Sora 2 from an advertising capability. It's not there yet. The Sora 2 ad can only be about 10 seconds today, but where will that technology be a year from now? And couple that with vertical solutions like they're taking on open evidence and helping doctors make best decisions. If they can own the medical information platform, it has the ability to deliver unprecedented amounts of data and and to your point, unprecedented amounts of screen time and eyeballs.
Sure, owning the medical data seems a little scary to me, but are you saying that this is all priced in now to these stocks? So, for example, you know, your thesis that the likes of Spotify, Expedia, Zillow, all the ones that were mentioned at the investor day, that they will all, you know, get business through OpenAI or Anthropic or what have you. Is that being priced in at the moment to the stocks like Nvidia and the chip providers and the cloud providers?
I will defer to the public equity analysts on whether the multiples make sense and it's priced in yet. However, I think when we hear so many people talk about, well, efficiency is not there yet, and so it's overvalued, and we're on the cusp of a bubble bursting. You know, I think it was just talked about this. The information is reporting that Oracle only makes 14% gross margin on this cloud business. And first, I would say there's so much we don't know because it's not it's not a reported business unit and Oracle's public statements. But the key thing here is that because of how fast Oracle stock dropped with the release of that article, it shows you the fear of the investing community being on the wrong side of a bubble bursting. So I think there's a lot of walking on eggshells at the moment.
So what are you doing? Where are you investing? I mean, technically, those few names that were mentioned on Monday, it could have been other names, right? So, you know, what are we missing out on then? That we're not, that we, you know, we have the blinkers on, so we're just concentrated on a few, but we should be looking at others.
Well, Bonnie, we spend a lot of our time in infrastructure investing. So whether it's energy and supporting the grid to then support data centers and the required electricity, we're spending a lot of time evaluating how to keep these data centers and GPUs cooled, and then also on the utilization of GPUs. So we've made a large investment in a company called Lambda Labs, which is a competitor to Coreweave. We're pretty excited about its future as well.
All right, Joe, thank you so much. That is Joe Kaiser of Mercato Partners joining.
Thank you, Bonnie.
Let's get a check on these markets now as we resume the rally. Well, gold resuming its rally too. What does that say? Let's see where the VIX is at too. The VIX had been trading above 17 yesterday. It went below it and then was back above it once again today. But even 17 doesn't seem that panicked. Well, we're back down to 16.6. So again, the Nasdaq 100 up 0.7%. Those stocks that got punished yesterday getting bought once again today. The dip buyers emerging for the S&P 500 as well, up 0.4%. And gold, whether it's a red flag or no, it's up to 4,043. So good thing Goldman upped its target for the end of the year to 4,900 because we're very close to its original target of 4,300 there. Let's get a look at some single stocks moving at this hour. Tesla rolling out cheaper versions of its top-selling EVs, offering less range and fewer features. The move aiming to offset fading U.S. tax credits that have slowed EV demand. Shares of AST Space Mobile are rising after the company signed an agreement to provide direct-to-cellular connectivity for Verizon customers starting in 2026, up 9%, Verizon down 0.8%. And credit score provider Equifax said it will offer mortgage credit scores more than 50% cheaper than Fair Isaac Corporation through the end of 2027, saying it's responding to FICO's, quote, monopoly-like price increases. You gotta love it. We have a price war in the credit history providing companies. What a year. Coming up, Thoma Bravo's Orlando Bravo is optimistic about the future of AI. We'll bring you part of that interview next. This is Bloomberg Open Interest. The debate around the AI bubble or not is getting louder, and billionaire Orlando Bravo is weighing in. He spoke with Bloomberg's Dani Berger at the LAVCA conference here in New York.
In terms of what happened during the bubble, one important lesson is to focus on the business and the numbers that are right in front of you instead of being too affected by the noise. These are general things that are going on right now. AI is going to be transformative. It's going to be so powerful. It's going to be so exciting. And it's very, very new and very early. So many people are paralyzed now, including LPs, to say, do I touch this area, a services company? Do I touch a software company? Is this going to be disrupted? I just get these inputs all the time of how everything is going to change overnight. It will change significantly, but it will be an evolution. Right after the dot-com bubble burst, I don't know who remembers and who was there around that time, people thought that enterprise software was dead. One article after the other. These stocks traded at $1 and $2 a share. Can you believe that? It's one of the greatest industries, $1.5 trillion economy today. We made a lot of mistakes before that, but we would go to these companies and they would let us look at all their files. We'd say, no, this is a good business. All the customers are renewing, they're buying more. They really need to use these products. So just focusing on the details and the business really helps you do something a little bit different than everybody else.
Well, it's interesting because it's a two-track, and I want to get into software more, but it feels like a two-track. You're describing LPs being frozen on legacy tech or evolving tech, let's call it. And then on the other side, a frenzy around AI and huge valuations that a lot of these private capital or public market companies are getting around AI. Do you look at that and say, we've gone too far?
Look, AI and software go together. That is becoming clearer and clearer. Look at the $250 billion market cap software companies. They have absorbed AI, and now they're selling huge agentic solutions to their customers. We have a portfolio of about $30 billion in revenue. Now, we're private equity, so we can react faster than other forms of governance. All of our companies now have big AI solutions embedded in their products or agentic solutions to close the loop. And now their available markets, or TAM, total available market, has doubled, tripled. It really, really goes together. It's not like this new thing where the corporate enterprise would completely change all of their processes, all of their technology, all of their interdependencies. AI will create new solutions and new use cases, many of which will allow people to use technology more than they were doing before. Look, there's so many solutions today that exist that allow customers to save half of the cost in many items, in supply chain, in many, many, many categories. And right now, society or companies use them 5%, 10%. So it all takes time, but once again, it goes together.
There is, at least you can see in public market, those nerves. Salesforce, Adobe, some of the worst performing stocks, underperforming the S&P, down, I think about 22% year to date. Because of that, and maybe that's a correct way to look at those specific companies, maybe not, has there been a valuation reset in private capital as well? And to what degree does that hurt you, or does it present opportunities?
The chairman said that he's an optimist, and I'm always an optimist. When you own a company, you always have opportunities. Now, you mentioned a couple of stocks, great companies. Now, is their valuations and multiples down because there's some AI threat, or are their multiples down because their growth rate has gone down?
We
really think it's the latter.
Bravo founder Orlando Bravo there speaking with Bloomberg's Dani Berger at the LAVCA conference. Coming up, we're now on day 8 of the U.S. government shutdown. We head to Washington next for the latest. This is Bloomberg Open Interest.
There are some legal analysts who are saying that that may not be appropriate or necessary in terms of the law requiring that back pay be provided. So I'm sure that'll be there will be a lot of discussion about that. But there are legal analysts who think that that is not something that government should do. That, if that is true, that should turn up the urgency and the necessity of the Democrats doing the right thing here.
That was House Speaker Mike Johnson speaking yesterday. His comments coming as President Trump opened the door to blocking back pay for federal workers. Bloomberg Washington correspondent Tyler Kendall joins us now from the White House. Tyler, is this something that the president can even do?
Well, Vani, that's one of the biggest questions here, and I have to say we actually just received updated comments from House Speaker Mike Johnson moments ago, who said that his understanding of the law is that federal workers will receive back pay, going on to add that he doesn't think that these workers should be caused financial hardship just because the government is shut down. But of course, all these questions have really emerged after we saw this OMB memo released, suggesting that perhaps these federal workers aren't automatically guaranteed to back pay once the government reopens. It appears that the OMB is taking aim at this 2019 law that was enacted and actually signed by President Trump after the last shutdown, and seen as that clear legal basis that federal workers would get back pay in light of a shutdown. However, according to this memo reviewed by Bloomberg News, the OMB is arguing that that law might be misconstrued and that these back pay appropriations need to be appropriated explicitly. It's not an automatic guarantee that these workers would get them. One of the big questions going forward here is whether or not lawmakers could step in if this does come to fruition. Again, this is just a draft memo, and we're already starting to hear some solutions being floated, including by Senator Susan Collins, a Republican from Maine, who said that they could actually tack on a measure to the current government funding bill that would make it explicitly clear that these workers will get paid. But Vani, that would mean that the House would have to come back into session. They would have to actually vote on that specific legislation, because as of now, the Senate is just re-voting on the same stopgap measure from the House that would fund the government to mid-November. Actually, in fact, in about 30 minutes time, we're expecting the Senate to take a 6th vote on this same exact legislation, and it is expected to fail once again.
Yeah, I think what the president said was that some of them don't deserve it. I think those were his words. Where are we on potential firings, Tyler?
Well, President Trump did say yesterday that he would make a decision on whether or not to follow through on permanent firings within the next 4 to 5 days, but he didn't really elaborate beyond that. So some of the questions that we have is what is holding up this potential decision if the administration does decide to follow through on it, whether or not it could be pushback from Republicans on the Hill that we have heard who are urging caution against such a plan, or if it's for technical reasons, right? Mass firings is going to actually take some protocol to go through that we know that the OMB has been advising specific agencies on. So it's something that we're watching very closely. But one of the other things that I would take from this, Vani, is the fact that President Trump did say 4 to 5 days. That would likely bring us to next week if that timeline does hold. So perhaps there's a little bit of hope being held out that negotiations could continue.
But we're not hearing anything about any breakthroughs between Democrats and Republicans as of yet, right, Tyler?
No, not at this moment. We know that there are informal discussions happening on a bipartisan basis on the Hill, but our understanding at the moment is that leadership is not engaged. Republicans are really holding the line that the government ultimately needs to reopen before they can formally start negotiations on some of Democrats' asks when it comes to health care. The chief ask that we're expecting to get the most pickup if there are negotiations is what extending those Affordable Care Act premium subsidies would ultimately look like. This is an issue that is dividing the Republican Party, since we do know many states that voted for President Trump in 2024 do have many people that are on these Obamacare insurance exchanges, considering these are states that chose not to expand Medicaid.
Tyler, thank you so much. As always, that is Bloomberg's Tyler Kendall there reporting from the White House. And House Speaker Mike Johnson is going to be a guest on Bloomberg Balance of Power today, 5 p.m. New York time. You don't want to miss that interview. So let's get a check on these markets. Well, the rally has resumed, almost as if yesterday didn't happen. We have the VIX at 16.68, so perfectly calm, or almost perfectly calm. The S&P 500 up 1/3%. The Nasdaq up more than 0.5% now. So we're off our extremes of the day. But again, you have the dollar strengthening, the yen trading at 152.50. You have crude rallying to an extent. A barrel of WTI at 62.51 now. Yields are really doing nothing. The 10-year yield at 4.11, the 30-year at 4.70. We do have that auction coming up at lunchtime. This is Bloomberg.